Market significantly off lows. The Sensex Nifty now trade marginally in the red. FMCG and Infra stocks lead while metals and Realty lag. Sharp recovery from day's low. Zomato has received a GST demand of over 400 crores along with a penalty of 400 crores and interest charges. The food delivery to QCom leader says it has a strong case against the levy. The stock shrugs off the news. Consumer price inflation cooled in November to 5.48%, in line with the estimate of 5.5%, down from 6.2% in October. The softer print lifts hope of a rate cut by RBI in February, though food inflation stays elevated at over 9%. Global electric vehicle sales hit a new high in December, climbing up for the 7th consecutive month. The monthly sales rose 32% year-on-year, with China accounting for nearly 70% of the sales. 18-year-old Domoraju Gukesh becomes the youngest world chess champion, breaking the record long held by Russian Grandmaster Garry Kasparov. He wins the title on defeating China's Ding Liren in the final game. Proud moment for India with Gukesh Domoraju becoming the youngest Grandmaster of the world. But you know, the master stroke right now is the bulls. This morning, in fact, from the lows of today's trading session, the Nifty seen a swift up move. The low of today on the Nifty was 24,180, telling you that we've bounced back from, the 20-day moving average that we nearly tested. And now we've bounced above that 50-day moving average as well. So that's telling you there is a phenomenal bounce back that we've seen from the bulls. And it's been led by a couple of these stocks which were actually the biggest underperformers earlier. So we have HUL, which has moved higher. Nestle, the FMCG index hadn't been doing it particularly well, so that's recovered. We have Bharti Airtel, which has been, outperforming from the word go all of today's trading session, so that's done well. And a couple of these heavyweights also have come to the party. So pull up something like an ICICI Bank. HDFC Bank itself from the lows has seen a recovery of about 1.5%, and Reliance as well. So the story of the day, it is Friday the 13th. An equal measure, it has been terrifying for both bulls as well as bears. Let's see where that goes. I'm Bangla Malu. With me is Hormaz Fatakia, and he has moved across to the wall. Why is that? Because Morgan Stanley, in their recent note, has said the Indian bull market is here to stay. Hormaz, looks like it was just this morning that bulls heard the Morgan Stanley note and they decided that they're here to stay.
Well, if this is not signs of the fact that it is here to stay, I don't know what is. And it's been a while, right, that we've been in this bull market, and a lot of skeptics have called this now an aging bull market. But Morgan Stanley is of the view is that this aging bull market still has more legs to run ahead. Now, this current bull market that we are in has overtaken the 2003 to 2008 run in terms of its length, although the returns in this bull market have only been a third of what we had seen back in this 2003 to 2008 period. Now, even the earnings cycle, the last few quarters have been a disappointment, but Morgan Stanley believes that we are still in the midway of this earnings cycle. The valuations also remain attractive, and hence this bull market is here to stay. Some of the other factors that Morgan Stanley highlighted is the fact that they refer to the private investment cycle, and if that picks up, that will extend earnings and that will also make valuations even more attractive. The domestic flows that have supported the market all through the year, they are not likely to taper down anytime soon. And the prospects of more FTAs, even more rupee trades, that will also add a fillip to the growth prospects of the country. And this per capita energy consumption that we're planning on talking about, that too is likely to increase going forward. And Morgan Stanley, it sees an upside to both earnings as well as valuations going forward. So in light of this, what should you own and what you shouldn't? Morgan Stanley believes that you should own financials, consumer and industrial cyclicals, although you should not be owning staples, utilities, healthcare and telecom stocks right now. There's a swift recovery in the markets, and that's what Morgan Stanley says. This aging bull market is here to stay.
Right, that aging bull market, wonder when it, the way it's rising right now, it becomes like a raging bull market. We'll keep an eye out on that, Hormaz. But, Jefferies too has come out with its India strategy for 2025. It's that time of the year, right, where everyone looks at the new year after putting the curtains to the year that has gone by. What are they expecting?
They are slightly cautious as compared to Morgan Stanley is Jefferies. Now for 2025, they have a Nifty target of 26,600, which is slightly higher than the record high of 26,277 that we had made in September. And what they say is that this 1 year forward Nifty multiple right now is higher than its 5-year average. And in line with the earnings growth, they are expecting this 10% return for the calendar year. And since they have a cautious view on the markets, they prefer large cap names over mid caps and small caps. Now, what they say is that this investment cycle right now is currently into its 5th year, and they see this further 5-year headroom for this to continue. The housing cycle is also strong. The inventories are at a 14-month low, which drives their bullish bet on the real estate space as well. We'll get to that in just a bit. And they also speak of private capex, which is on the rise in sectors like power, electrification, PLI schemes, and building materials. And it is this capex uptick that will drive this 6.5 to 7% growth that we are likely to see in terms of GDP next year. Now, what are the sectors that Jefferies is overweight on? One, of course, is real estate that I just spoke of. Other being financials, IT, telecom, auto, and power and utilities as well. Now, for the underweight, they are discretionary is one sector that we are underweight, excluding the auto space, including energy, staples, and building materials as well. Now, what they say is that they also speak of the domestic flows that will continue, and they also speak of the supply of paper, which is likely to remain elevated in 2025 until there is a correction in the market. And for the next year, they have highlighted 9 stock picks, including the likes of ICICI Bank, Axis, SBI, and some of the other index heavyweights. Upsides ranging anywhere between 20 to 40%, but on the index, they are slightly cautious.
All right, we take that point, Hormaz. Thank you so much for that. Banks like IndusInd Bank, Axis Bank, AU Small Finance Bank, all of them in focus today. The brokerage firm UBS has, written on the banking space, slightly cautious. They've cut their target prices on the names that I just mentioned. I'd request Hormaz to join us back while we go across, to Abhishek. Abhishek, what exactly is UBS concerned about, and what is their rationale?
Rising credit cost in the CV portfolio and the deterioration in asset quality over there, that is commercial vehicle as well as business loans. We had highlighted about commercial vehicles a month ago that there is a deterioration in asset quality that's happening over there, as well as loan growth coming off. So that is what is the key highlight with respect to UBS report as well. The NPL risk have increased for CV business and business loans. They say that early delinquencies in CV business rose by 150 basis points in October versus March 24, led by mid-sized private banks as well as NBFCs, while business loans too saw some increase in the delinquencies by about 70 basis points in the same period, that is between March to October. Moreover, static pool analysis of disbursements in the recent quarters do suggest that there is deterioration in the portfolio quality. They maintain their view of rising NPLs and raise credit card estimate anywhere between 2 to 25 basis points across lenders. So amongst banks, IndusInd Bank, they have a neutral rating, but they have cut the target price to 1150 from 1350 that they had earlier. They have cut the EPS estimate by 5 to 6% over the next couple of fiscals. Axis Bank, they have a neutral rating and cut the target price by rupees 40 per share to 1,210 per share from 1,250 that they had earlier. AU Small Finance Bank, they have a neutral rating, but the target price cut is massive over there by 110 rupees to 640 per share from earlier target price of 750 per share. The top picks remains SDFC Bank, ICICI Bank and Federal Bank, and they say that amongst NBFCs, they increase their credit cost estimate between 1 to 20 basis point for Bajaj Finance, Chola, Shriram as well as Mahindra, and hence they have cut their EPS estimate anywhere between 1 to 7 basis point over there itself. Back to you.
Abhishek, thanks a lot for that. A cautious note coming in there from UBS. Time for a short break. Up next, we'll get you more on the stocks that are moving in trade on the back of news updates. Stay tuned. Welcome back. Onto some stocks that are moving around. Indian Oil is one of them. Jefferies upgraded the stock this morning, raised its target as well. Sonal is here with more details. Sonal.
Well, yes, it is a stock which is in the green, and that is on the back of a Jefferies upgrade that has come by. The brokerage has upgraded the stock to a buy from a hold. They've also increased the target price to 185 versus 165 rupees a share earlier. Now, remember, we've been talking about how Q3 has seen an improvement in refining margins after a dismal Q2, and that is something which would benefit IOC the most because it has the highest proportion or the highest exposure to the refining segment amongst all the three oil marketing companies, and that is something which would be beneficial for IOC the most. Now, their risk reward is favorable after the recent correction, according to brokerage firm Jefferies. It's trading at a 70% discount to Nifty compared to the long-term average of 57%. All these oil marketing companies have always traded at a massive discount to Nifty valuations anyway. The stock is off around 30% from its peak. It's up around 9% from November lows, and Jefferies expects this uptick to continue now that fundamentals are in favor of the OMCs.
All right, so that's about IOC outperforming in today's trading session. The other one is Bajaj Projects. It's trading, buzzing in trade today after it's won orders from Solapur Transmission. Vivek, it's not a stock that we talk about very often. It's a 13% up move, an order coming in from Solapur Transmission.
Well, that's right, Bajaj Projects. Now, just to give some perspective as to, this particular company, market cap of a little over 3,000 crore. Remember, this is actually the demerged entity of Bajaj Electrical, and this particular company mainly does EPC projects, regarding and for projects for as far as the power transmission as well as the distribution space is concerned. What's keeping the stock perked up today? The company has given an update to the exchanges yesterday. The company was awarded a supply of goods and services contract from Torrent Power Project SPV. This is in the state of Maharashtra. The company was awarded the contract by Solapur Transmission Limited, which is the project SPV. What is the scope of work as far as Bajaj Projects is concerned? The company has to do the EPC work of design, engineering, manufacturing of 400 kilovolt of line base, and this particular project expected to be completed within the next 15 months from the date of letter of award.
13% higher now is Bajaj Projects. Vivek, thanks a lot for that. And the stock with this move has now doubled in 2024, 277 there on the stock. Some of the other movers then in the broader markets include the metal names, and that too, that was the sectoral index that was trading lower in today's trading session. It continues to remain so. 1.5% down is the Nifty Metals Index, and so that was most of the stocks too in the index were trading in the red. Nigel is here with more on that. Nigel.
Well, that's right. Metals are the top losing index in today's trading session. But keep in mind, it's on a 6-day winning streak. And if you look at it in the last 1 year or so, the metal index has actually outperformed what was happening on the Nifty. And that comes up for you on the screen. It appears a few factors are playing out in today's trading session, and that should also come up with you point by point. We'll put down a few points that come up for you on the screen. Point number one is the dollar index. Well, that's moved up to around 107. Remember, the dollar index strengthening is not very, very good news for base metals, and that has a negative sentiment. Point number two is Chinese, they are talking about stimulating their economy. They're talking about, increasing the fiscal deficit, borrowing more as well. Fiscal deficit for this year was around 3%. They're expecting it to go to close to around 4% or thereabouts. But the street, they want some concrete moves. They're saying this is not good enough. So the expectations are that we should hear something more, more concrete on the ground. And then yesterday we had commentary that's coming from the Steel Ministry. And I think the way the street read it was the Steel Ministry is batting for duties. They took it that the duties are going to come very, very soon. And because of that belief, the stocks actually ended at the high point of the day, which hasn't happened overnight. So that's why we're seeing some profit taking. And also the Chinese yuan, it's depreciated. So every time you increase duties and they depreciate their currency, well, it nullifies that. So we'll have to see how that plays out as well. And finally, earlier today, well, we had a market guest with us, Mr. Pankaj Tibrewal. He sounded actually rather optimistic about the prospects on business going ahead with regard to the metals. He made a couple of points. The profit contribution is at the lowest we've seen since 2001. He also said under ownership could play a role. And two of the largest economies, China and USA, are looking to stimulate their economy. So that's what could keep things stimulated. So that's why he's contra on this sector. Back to you.
All right, Nigel. Thanks a lot for that. So that's about the metal space. Been an outperformer, maybe some bit of profit taking, but the near-term, mid-term prospects, given the sort of stimulus that there is from China, or the hopes of stimulus from China and the US, should support the sector. But let's talk about the banking space. Speaking exclusively to Shireen Bhan, KV Kamath, the chairman at Jio Financial Services, gave his take on the adoption and regulation of cryptocurrencies, admitting that he is still at a loss on how to value a currency which has no underlying. Listening to that conversation will be very, very interesting.
What do you believe India's position ought to be on issues like cryptocurrency, etc., as we move forward? Do you believe the time has come to recognize them as an asset class or not?
Shirin, I'm very old. So,
you're not old at all, sir. You're not old at all.
I am very old. So I have to have some, I still cannot, as a banker, get it out of my mind that, how do you value something where there is no underlying? We have a phrase, there are eminent bankers here. Where there is no underlying, how do you, value it? So I am still at a loss trying to come to grips with, Bitcoin. Maybe I'm wrong, but I would stay in my corner for the time being.
Let me ask you this in the context of what we're seeing happen as far as India's startup ecosystem is concerned, which is now evolving and emerging as a new engine of growth. You also talked about regulation, and you said if the customer wants it, the regulators will have to oblige. Quick commerce, nobody thought that 10-minute delivery would be possible, and yet it is uniquely an India story that has been a success story at this point in time. We've just seen the blockbuster listing of Swiggy and what Zomato, etc. are doing. As you look at how this ecosystem is emerging, the ideas, the innovation, the valuation to wealth creation journey, what gives you confidence? What gives you hope? How do you see this playing out?
Yeah, you see, I'll start by, you mentioned regulator will have to listen. I said that. But what I meant is the regulator is already listening. As if you look at the sandboxes of the last few years that our regulator has brought in, the regulator is one step ahead of all of us. So that's a huge, for me it's huge. So the challenge as we go along is, who do you look at as your model? If you are a financial sector player, if I am a financial sector player today, I would not look at another bank or another financial service company. I will look at what Swiggy is doing. See, when Swiggy started and I started using Swiggy during COVID, Swiggy, the back end was a human. And slowly the human went out. Today it's an intelligent machine. That intelligent machine tells me that, I have a change in order, your refund will be back in your account. It used to say 7 days. And the next minute it will be up. Still now it is saying it will be in your account in the next few minutes. But it's down. So that's the level of efficiency that is there without a human. So that is what everybody will have to aim for. Not only financial sector players, but other players also.
All right, and remember, you can catch the excerpts of this interesting conversation all through the day only on CNBC-TV18. We take a short break, come back on the other side. Jay Thakkar of ICICI Securities joins in with some trading strategies. You're watching us here on Halftime Report. It's halfway through the trading session, and what's very interesting, the first half of trading session itself, the Nifty's had two halves of trade itself. The first half was, a big decline that we saw all the way below that 24,200, and from there itself, it's been a real 400-point recovery. The Nifty is at the high point, and it's consistently surging now around 65 points in terms of gains. And if you look at all the indices, the frontline indices are doing well. So you have both the Nifty as well as the Nifty Bank. The Nifty Bank, a mild underperformer as compared to the Nifty, but a fair amount of recovery from the lows is what we've seen. The problem is, the broader markets, that's under pressure, and that continues to stay under pressure. It hasn't shown as much as a recovery as we've seen for the Nifty itself. So that will be very interesting to track as we move forward. And in a session that is as volatile, what's even more volatile is the volatility index. At one point, it was up around 10.5%. Now it's cooled off a little bit. With the markets rising once again, we've seen the India VIX hold with gains of around 4% as well. So today's trading session, if you have to sum it up in, technical levels, it broke below the 50-day moving average at the open, then went all the way to 24,180, took support at the 20-day moving average, and now has conquered the 50-day moving average once again. The level to watch out for would be the 100-day moving average around the 24,700 mark. In the option space, that's where a lot of excitement happened. First, we had a bunch of outperforming stocks that came in from HUL, Bharti Airtel, which is up 4%. FMCG stocks, by and large, are doing a lot better. We can see that in Nestle and Colgate as well. These were underperformers over the last few trading sessions. And then as we move into holiday season, Zomato brushed off concerns of tax-related issues, recovered from lows. Swiggy is doing well. Jubilant Foodworks under pressure yesterday, bouncing back today. And when you talk about pizzas, you talk about burgers as well. Here's where the interesting part is when it comes to options. You know, earlier we had the 24,600 put writers, which were caught on the wrong side. So they had to cover some of their positions. Now with the market moving higher, these guys are back writing these positions. So this 7.5 negative number will only go slower from here. 24,000 put writers, they too had covered their positions. Now the market's recovering once again. This number has gone into the green. So that means put writing is back at 24,500. On the other hand, these call writers who thought they would make a quick buck by writing these calls, the market was down. Now they are caught on the wrong side. So the next leg of up move will come from short covering from these 24,000 call writers at 24,600 as well, 24,400. And we saw a fair amount of writing at the 24,300 call too when the market was below that 24,200 mark. So all these guys will have to run for cover, and as a result of which we may perhaps see a further up move in the second half of trade. The market, today's low, will be extremely crucial, and that's what 24,300 put writers are backing as well. Interesting, volatile day, and that's what we see through all the options and futures as well. The only stock that I'm watching out for from an F&O band perspective is SAIL. Metal is not doing too well, and SAIL may enter F&O band today.
What's a party without pizzas and burgers, right? The Bulls are definitely having one this Friday afternoon. They were not doing so until the last half an hour or so, but that is what the case has been. What's in store now for the Nifty? And Jay Thakkar of ICICI Securities is joining in on the show now. Jay, good afternoon. Thank you for joining in. You know, what's causing this recovery, right? Until at least 45 minutes ago, we were down almost 300, 350 points. Now we are back in the green. It almost seems like a graveyard for anybody who wants to play the day. What's the call on the index now? And couple that up with your stock-specific recommendations as well.
Sure, Hormaz, and a very good afternoon to you. Hormaz, if you relate this to the last weekly expiry of Nifty, I mean, it was the similar kind of volatility which we had seen the last week as well. I mean, see, Hormaz, now with the other weekly expiries which have been now stopped, and we're just left with the 2 weekly expiries. So the focus is now on Nifty and Sensex. So last week we had this kind of volatile move on Nifty. The intraday range for the Nifty was almost for 550 to 600 points. And today, as of now, if you see, then it's almost of 400, 425 points. So if you ask me that whether it can be the similar kind of a length, then another 100 odd points up move can be seen in order to have the similar kind of a candle. Volatility is high today, as Mangalam pointed out as well. I mean, if you look at the Sensex ATM straddle call and put as well, the total, then it comes to around 600 as of now as well. So yesterday's closing was at around 500. It's still at 600. Intraday level it went up to 700. So these higher premiums clearly Hormaz indicates the volatility. So you can see some further volatility for the remaining part of the day as well. And I would not be surprised if we see another 100 points up and thereafter 100 points down. So that would continue. But having said that, I would say that stock-specific momentum, is quite there in the Nifty mid-cap IT names. So my first buy recommendation would be out of it as well. So LTI Mindtree, which is trading at around the levels of 67.22. I think that on the lower side, 6,600 now positionally is a crucial support level. It has provided a nice breakout from a multiple resistance level. We have seen a good long build-up happening there. So 6850 to 6950, these will be 2 short-term targets on LTI Mindtree. I'm relatively bullish on the mid-cap IT names. Pharma, I think that might underperform based on some of long liquidation that can happen out there based on the data as well. So Divi's Lab, which is not able to manage or sustain at the higher levels, is trading around the levels of 5850, 5860 Hormaz. So I think that 5950 to 5970 would be a crucial resistance range for Divi's Lab going forward, and it can test the levels of 5,700 to 5,600 going forward in the short term. So here is my sell recommendation on Divi's Lab. And a final recommendation is on Bharti Airtel. I mean, that has shown a classic recovery. We have seen a good long additions now happening out there as well. 1672 is where it's trading right now. I think it's heading towards the levels of 1740 to 1770 levels going forward. So yes, we can see lifetime high again coming on Bharti Airtel, the kind of long which we are seeing out happening here. 1635 could be a good short-term support. So that with that as a stop loss, I have a buy recommendation on Bharti as well. So there are 2 buy recommendation and 1 sell. Looking at the options data, one more thing, final thing, Hormaz, which I would like to add is that in this kind of a recovery which we have seen, Nifty put options or Nifty put base have now increased. So, for the intraday perspective, I believe that 24,400, 300 range should hold now. But the similar kind of recovery or covering we haven't seen as of now in financials. So that's the reason I haven't covered any stock from the BFSI segment on the long side.
All right, we take that point, Jay. What's also interesting is that there's so much volatility that while we've taken support at 20-day moving average, moved beyond the 50-day moving average, the 100-day moving average still, proves to be a bit of a resistance. 24,706 is where it is. And if you look at the intraday chart of the Nifty itself, it tells you that, moments ago we were up 65 points, and a few minutes later we're down about 10 points. So it's all happening. Let's put it that way. It's one of those days where both the lower end and the higher end of the range is being tested. After 155 points over the last few trading sessions, the Nifty has decided to take that jaunt, and 600 points in today's trading range itself. What we'll do is come back after a short break, get you more on markets and a lot of stock specific action. Stay with us.
Welcome back. Time to get you some more market opinion now. Pankaj Tibrewal of Ikigai Asset Management says he told CNBC-TV18 this morning that the market correction is healthy and quality is making a comeback. Now, he also gave his take on metals and the cement sector along with the BFSI space. Listen in.
Couple of sectors which are looking probably interesting and maybe contra at this point of time. One, I believe, is cement. I think the worst in cement is behind us. The second, I think, is metals. It's a complete contra thought, but we believe that the contribution of metal sector to the overall profitability pool in the country is back to 2001-2 levels. And that's an interesting space to be in because two of the largest economies in the world will have a fiscal loose policy. From a 2025 perspective, a couple of sectors which are looking probably interesting and maybe contra at this point of time. One, I believe, is cement. I think the worst in cement is behind us. The second, I think, is metals. It's a complete contra thought, but we believe that the contribution of metal sector to the overall profitability pool in the country is back to 2001-2 levels. And that's an interesting space to be in because two of the largest economies in the world will have a fiscal loose policy.
All right, interesting opinion coming in from the market veteran Pankaj Tibrewal. And as we do that, here is some good news for you viewers. India's news leader is just a click away, introducing CNBC-TV18's all-new app. We can get instant access to breaking news, in-depth articles, and financial world updates coming in at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, depending on the operating system that you have on your phone. And get all the business updates and all the news, in-depth research and analysis at your fingertips in real time. In case you miss it on television, you can catch it on whatever screen you operate. CNBC-TV18 app. Welcome back. Let's go across to Sudarshan now, who's joining in with some interesting data on electric two-wheelers, Vahan. Sudarshan, what exactly is the data telling you?
So we have Vahan data for the first 12 days of December so far, and it indicates a further market share gain for Bajaj Auto's Chetak in two-wheeler electric vehicle space. So where exactly Bajaj Auto has gained from? Now, if you look for the month of November, Bajaj Auto's market share in November was 22%. Now it has jumped to almost 28%. Exactly, it's at 27.7%. And similarly, if you look at Ola Electric's market share, in November, its market share was 25%. Now in December, first 12 days, market share has dropped to 18%. So basically, Ola's loss is a gain for Bajaj Auto's Chetak. In FY25, if you look at the market share for FY25 from the month of April 2024, in April 2024, Bajaj Auto and TVS market share for both these companies were at 12% each. Now, Bajaj Auto's market share is 27.7%. For TVS, it's at 23%. For Ola Electric, in April 2024, market share was at 52%. Now it has dropped to 18%. So basically, Ola continues to lose market share, and in contrast, it's a gain for Bajaj Auto, which has seen a sharp surge in market share, almost 700 basis points higher against if you compare from the month of November.
All right, Sudarshan, you know, it's telling data. We can see that in the stock price move as well. Bajaj Auto actually, as you were pointing out, that data has moved into the green, doing extremely well, currently holding with a gain of just about 0.5%. Remember, the stock has seen a correction from its highs already, but holding up in the green. Whereas Ola Electric currently slightly under pressure. Will be interesting to see where it goes from here on as well. First 12 days of December, early days, but you know the trend is pretty clear. We did have Rajiv Bajaj speak about Bajaj Auto becoming the largest market share in December on electric two-wheelers market itself on the India Business Leader Awards day itself. But you're also tracking a few other auto and tire stocks which are reacting to some news updates.
So first one is Tata Motors. It has announced a price hike for its commercial vehicle segment. It has announced that it will take price hike by up to 2% effective January 1, and it's on the back of increase in input costs. Similar to Tata Motors, Ashok Leyland has also announced an increase in prices for commercial vehicle segment, but for Ashok Leyland, price hike will be up to 3% from January. Another news is also there for Ashok Leyland. It has bagged 346 crore order from Tamil Nadu government, and it's for supplying 1,475 diesel fuel type passenger bus. For JK Tyre, DEG, that is a financial institution company, will be providing the company with a long-term loan of rupees 270 crore, which company will use to fund for the expansion of Madhya Pradesh unit. Remember, company had announced total estimated cost of 1,010 crore for this Madhya Pradesh unit last year. So now it will be using the fund that it will be getting from DEG to expand that unit. So these companies are in the focus on the back of these news.
All right, we take that point. You know, you had a point to make?
No, please.
I just wanted to, you know, point a stock while Sudarshan was speaking about the auto sector. We were talking about how, you know, this is December season, QSR stocks doing extremely well. Look at Westlife Food. The intraday of Westlife Food comes up for you. Currently at the high point of trade, and it's a surge of nearly 8%. Last 4 or 5 quarters have been very weak for all the QSR players, but can this December be a sign of change for them? Because they are increasing their store presence. There is sentiment uptick that is happening, and they have the favor of low base as well. If they, you know, ramp up their dine-in and delivery as it has been doing well, it could perhaps be doing well for players like Westlife Food and Jubilant Food.
I'm telling you, these guys are prompting us to order some stuff to our newsroom, I guess, on a Friday afternoon.
Prompting us or prompting you?
Prompting us. I'll pull you into the loop as well.
What I do is I'll just eat whatever you bring.
Well, it's now time for the Growth Code, an initiative by Grow and CNBC-TV18 designed to help you navigate the market and make informed trading decisions. This week, we dive into the problem of revenge trading and equip traders with actionable strategies to avoid making emotional decisions.
It's that gut-wrenching moment when you watch the market turn against you in seconds. The panic sets in, your stop loss hits, and instead of stepping back, you tell yourself, I will get it all back right now.
It's not just about the money. It's about your ego, your pride, and proving to yourself that you're not wrong.
You're no longer trading a setup or a strategy. You're fighting the market as if it's a personal enemy.
Every decision becomes irrational, fueled by anger and desperation, until you dig yourself deeper into the hole. That's revenge trading, an emotional reaction to losses where traders take impulsive, high-risk trades to bounce back. Unfortunately, it's one of the quickest ways to drain your capital. In fact, in India, 80% of intraday traders who lose money double down on their losses. What's the smarter move? Pause and reflect. Step away from the screen after a loss.
अगर आपको रिवेंज ट्रेडिंग को रोकना है तो बहुत ही इंपॉर्टेंट है आप एक लिमिट सेट कर दीजिए कि मुझे अगर डेली का इतना नुकसान हो गया तो मैं ट्रेडिंग बंद कर दूंगा, या वीक में मुझे इतना नुकसान हुआ तो नेक्स्ट एक वीक तक मैं ट्रेड नहीं करूंगा.
Remember, trading is a marathon, not a sprint.
Welcome back. Shifting focus to the insurance space now. A CNBC-TV18 news break was confirmed when insurance regulator said that it's considering to tighten the norms to curb over-dependence on bancassurance channels. Now, to discuss in detail on this development, we spoke to Nilesh Sathe, the former member of the IRDAI, and Rajesh Sood, the managing partner at Atisaya Partners, former executive vice chairman and CEO at Max Life Insurance. Listen in.
One thing which is certain, that over-dependence on one channel is always is never good. So it is necessary that there has to be a spread, because insurance is ultimately spreading of risk. So this principle applies everywhere. You should not be over-dependent on one channel. As far as heavy dependence on one insurance company is concerned, or one bank is concerned for insurance company, both is harmful. But then it should not be reduced to 50% overnight. They should be given some sliding path by way of which they should be asked to reduce it maybe by 10% every year, so on and so forth, up to 50%.
I certainly would advocate multiple insurer tie-ups. That for sure is something that I believe is healthy, because it promotes competition within the industry as well, and certainly offers choice to the customer. I think a pathway, a gradual way to kind of comply with a certain diversification norm should be the way I would say it.
Confirmation of a CNBC TV18 news break there. Mind you, the markets continue to remain as volatile as they have been. The Nifty now back in the green, 20 points higher as we speak, 24,570, and almost 400-point recovery from the lows of the day. And as Jay was highlighting as well, right, that there is still more volatility that is expected towards the later half of the trading session. Final couple of hours of the week to go. The IT index is holding on to gains. The FMCG index has slipped into the green as well. The Wix is off the highs of the day despite these extremely choppy moves that we see. But what is not doing well though, PSU banks, Realty and metals, all the three indices continue to remain in the red. But with that, it's a wrap on this edition of Halftime Report from Mangalam, me and the team that put this show together. Thank you so much for watching. Business Lunch up next.